Robert Kiyosaki reveals why he never saves money and discusses the massive cash heist that is taking place right now in front of our eyes. In this video, we will take a look at why Robert Kiyosaki believes the banks will seize all of your money. The author of the personal finance book, Rich Dad Poor Dad, Robert Kiyosaki, has shared his thoughts on the best assets for investors to consider while predicting the end of false money. According to Kiyosaki, the alleged scarcity of gold and silver coins announces the end of phony dollars. I believe the economy is the largest bubble in world history. He tweets, "May God have mercy on all of us, because many financial assets have become cheaper during the current market collapse. It may be tempting to buy the dip." That, however, is not what Kiyosaki is doing. As many of you are aware, I do not invest in stocks, bonds, ETFs, or mutual funds. Please do not listen to what I'm about to say. I would get out of paper assets, he says, adding that the global economy is not a market. On September 20th, Kiyosaki recommended investors to protect themselves by purchasing silver, which he anticipated would soar to $500. Robert Kiyosaki's support for silver comes after he previously stated that gold is too expensive to be an appealing investment asset in today's market. Simultaneously, Kiyosaki reiterated his opposition to Federal Reserve policy targeted at curbing surging inflation in a tweet on September 25th. He claims that the Fed is to blame for rising inflation because it has hiked interest rates. The author also warned that the Fed's methods will undoubtedly destroy the US economy. While pushing investors to invest in genuine money, Bitcoin, gold, and silver were highlighted as formidable investments. Notably, Robert Kiyosaki has predicted the worst market crash in history while promoting gold, silver, and Bitcoin. Kiyosaki also prophesied that Bitcoin would undergo a massive upheaval. Even if the Federal Reserve plans to print more money, according to Kiyosaki, investors will still have a chance to earn richer in the future. Holders of Bitcoin, according to Kiyosaki, would likely gain richer when the Fed changes its monetary policy to minimize the impacts of increased money printing, he stated in a tweet on December 9th. In addition to Bitcoin, the author stated that the precious metals such as gold and silver are expected to return more value than conserving money. Interestingly, Kiyosaki warns that pensions would inflate, noting that the situation is the next global lemon. Notably, Lehman Brothers' bankruptcy in 2008 marked the culmination of the subprime mortgage crisis, which contributed to the recession. Next global lemon pensions. What plan do you have? Will you get wealthier or poorer? People who possess gold, silver, and Bitcoin will become wealthier when the Fed, Treasury, and Wall Street pivot and print trillions of fictitious dollars. The biggest losers will be those who pretend to save money. Do not be a loser, he said. Indeed. Kiyosaki has continued to warn of a catastrophic market crash while blaming the Federal Reserve for its handling of inflation. In April, he warned that if inflation is not controlled, it may wipe off half of the US population. Meanwhile, the author said that the cryptocurrency and precious metals could provide a safe refuge. Despite the crypto market maneuvering and the lengthy sell-off exacerbated by the FTX crypto exchange crash, Kiyosaki remains bullish on Bitcoin. Kiyosaki believes, "I'm still positive on Bitcoin, but don't consider silver and the silver ETF the same thing. And Bitcoin is not synonymous with Sam Bankman-Fried. The issue is with FTX." Indeed, Kiyosaki argues that, notwithstanding the crypto sector's turmoil, the development of FTX has little bearing on the future of digital currencies. According to Finbold, Kiyosaki stated that the global economy can sink due to supply chain disruption, rising inflation, and political instability, citing the trade disputes between the United States and China as a potential concern. After days of consolidation, Bitcoin is seeking to make a significant rebound above $17,000 as Kiyosaki remains positive on the market. By press time, Bitcoin was trading at $17,180, up about 1.5% in the previous 24 hours. Question: what is worse than a Great Depression? Kiyosaki tweeted. Answer: a worldwide recession. Unfortunately, we are in a worldwide recession, he added. Hold on, the world had a rough landing. It's bad news. Bankruptcy, unemployment, and homelessness are all on the rise. Toast to retirement. However, the acclaimed novelist noted out there is good news for investors. Elaborating, bargains are everywhere. Gold, silver, and Bitcoin are all priceless. Kiyosaki warned in July of last year that inflation might lead to a worse downturn, adding that real estate is collapsing and layoffs are beginning. In April, he also warned of hyperinflation and depression, saying that the US dollar was ready to implode. Bad news, he said again in Monday. There will be a depression. The author of Rich Dad Poor Dad is hardly the only one concerned about a worldwide recession. The World Bank warned in September last year that the probability of a global recession in 2023 is increasing as central banks around the world raise interest rates in reaction to inflation. Furthermore, the International Monetary Fund has predicted a difficult year for the global economy. Kiyosaki has frequently cautioned about the state of the US economy while advising investors to purchase gold, silver, and Bitcoin. He frequently stated his distrust of the Biden administration, the Treasury, the Federal Reserve, and Wall Street. He emphasized that the Federal Reserve and the Treasury are undermining the US dollar. The well-known author previously stated that he expects gold, silver, and Bitcoin owners to get richer when the US Federal Reserve pivots and prints trillions of fictitious dollars, noting that the stock market will tumble, sending gold and silver prices further higher. He predicted that gold would reach $3,800 by the end of the year, where silver would rise by $75. He also warned in one of his tweets last year in October that if the Fed continues to raise interest rates, the US dollar will strengthen, leading gold, silver, and Bitcoin values to fall. And when the Fed reverses course and lowers interest rates, you will laugh while others grieve. While Rich Dad Poor Dad author Robert Kiyosaki addressed why gold, silver, and Bitcoin prices are rising, he singled out silver in his latest tweets as cheap and affordable, reaffirming his earlier comment that silver is the finest investment value today. Kiyosaki told one of his Twitter followers on Wednesday that he had been buying silver for years and that it is the best investment value today because it has been a terrible commodity for the previous 50 years. He went on to say that gold-silver ratio is often 1 to 15, which means that 1 ounce of gold may buy 80 ounces of silver. He tweeted on January 14 that Bitcoin, gold, silver, and oil are heading up in price, noting, "Good news for those that know inflation is lasting, now systemic, not ephemeral." This is bad news for the uninformed, the poor, the middle class, and everyone who believes Biden cares about them and their families. In December, the famed author predicted that when the Federal Reserve pivots and prints trillions of dollars, Bitcoin investors will benefit. He clarified in November that he is a Bitcoin investor, not a trader, and that when the price of BTC falls, he feels excited. In September, he urged investors to invest in cryptocurrency immediately before the world's largest economic crisis occurs. When the Federal Reserve changes interest rates, it impacts the cost of borrowing, which in turn affects consumer spending, business investment, and overall economic growth. By staying informed about changes in monetary policy, individuals can better understand how these changes may impact their financial situation and make informed decisions about investments. High levels of government debt can have negative consequences for the economy, as it increases the risk of inflation and reduces the government's ability to respond to a recession. To mitigate these risks, individuals should consider investing in assets that are not tied to government bonds, such as precious metals, real estate, or commodities. These assets can provide a hedge against inflation and protect an individual's wealth during a recession. Hard assets, such as gold, silver, and real estate, can provide a valuable hedge against inflation and protect an individual's wealth during a recession. These valuable assets are expected to hold their value even during times of economic turmoil, providing a valuable source of stability during uncertain times. When considering investments in hard assets, it's important to do thorough research and seek the advice of a financial professional to ensure a well-diversified portfolio. And with that being said, it's time to end our video. Subscribe to the channel for more amazing videos like this. We'll see you with another interesting video.